March 4th, 2024. Today we got a measured move up of this entire trading range. It was a pretty big trading range day, and a lot of times what will happen on these trading range days, you can see what's exact, is when you start to get the breakout above, everyone thinks that, well, first off, generally when you have the opening range, you get a breakout of it in some sort of measured move. When you have a relatively tight range all day, traders are waiting to see a breakout, and when they get the breakout, they're eager to buy, looking to get to the measured move. And that's why you get such a big bar on 62, because traders started to see the market going up and they panicked in, hoping that we were going to get this measured move up, expecting that we were probably going to get it. So that's why you get such a big bar on 62, because bulls are aggressively buying the close, hoping that we get to that measured move. I thought that most likely we were going to go above last week's high because of the weekly chart. You can see on the weekly chart, we had this bull signal bar and it's a buy signal bar, and I thought it would probably trigger. So coming into the day, my main thought was that I thought we were going to end up with something rather disappointing for the bulls. And I thought we would trigger the sell above yesterday's high, and then, potentially get some sort of reversal down. It didn't work out the way I expected it to, but that is what ended up happening. And I think this sell-off at the end of the day has a lot to do with the bulls, realizing that we're probably going to get something disappointing on the daily chart for the bulls. And so that's why that happened. Bull bar on 1, but a tail on the top. So not really a good buy. Probably buyers below. You can see there were buyers below. And a doji bar on 2. So poor follow through. A bull bar on 3, but a tail on the top. It's probably always in long at this point, but really not that great. Not clear. I'd rather wait. Then a doji bar on 4. So more sideways. Bull bar on 5, but a big tail on the top. This is a potential wedge. 1, pullback, 2, pullback, 3. But do you really want to sell below 6? 6 is your signal bar, and you've had 1, 2, 3, essentially 4 dojis in the first 6 bars. So really not all that good. Probably buyers below 6. You can see there were buyers below 6 during 7. It's a bear bar, but it doesn't close very strong. And a reversal bar up on 8. A bull bar, but not closing very strong. Bulls want a breakout above the wedge and some sort of measured move up here to around last week's high. But I'd rather wait and see the follow through. A bear bar closing near its low on 9, but again, show me the follow through. This is the middle of a trading range. I don't want to sell below 9. I'm probably going to be disappointed. And then you get a reversal up on bar 10. Bar 10 closing near its high. It's a double bottom. It's a credible swing buy. I would say if you're going to buy above 10, buy small and look to add on higher. And 11 did something really important. Well, first off, when you get this wedge on 6, very likely you're going to get 2 legs sideways to down. And you can see 7 and 9 qualified as your 2 legs sideways to down. So the bears achieved their minimum goal for the sell below 6, which was 2 legs sideways to down. So another reason why it's credible to buy above 10. If you're buying above 10, you don't want it to trade back down here, because look what happened. If you're buying above 10, you had bears who sold below 9 and they got trapped. And on 11, the tail on it allowed those traders to sell out of or to exit their shorts around break even. So if you bought above here, it pulled all the way back and let those traders who sold there buy back their shorts. So there's less fuel to this trade because you have less trapped traders. 11 closes on its high. I wouldn't add above 11 if you bought above 10, but I think buying above 11 is similar to buying above 10. Still a big tail, not the best follow through bar. We haven't had a close above the moving average yet today, so the bulls want to get a close above the moving average. And 12 is really disappointing. I think if you were long and you saw 12, sometimes what you get is a bear bar here because traders will just exit. Bulls wanted 12 to be a minimum of bull close, because if it was really even a 1-tick bull close, it was probably going to close above the moving average, even at a 1-tick bull close. So that was really what they wanted to see, and they didn't get it. So a reminder that this is probably a trading range day. Follow through for the bulls on 13, but a tail on the top. If you're long up here, you're looking for a give up bar. You're looking for a spot where the bears essentially say, okay, this is, we're going to the measured move, and they give up and you get a big bull bar. And that never really happened. You wanted 13 to close on its high, but it wasn't quite able to. You get a doji bar on 14, but that's not quite what you wanted. And then, you're hoping for a big bull bar, maybe a series of big bull bars. And then you get 15. You want 15 to close on its high so you can buy above it. But again, not really doing what you want it to do. And you can see that 15 ends up being right around 2 to 1 of true risk, where traders take profits instead of holding for the swing. So then that's why they get out, and that's causing 16. Bulls, I think you exit below 16. We have 2 legs sideways to up. Here, one pullback. Sorry, my cat just jumped for some reason. 1 pullback 2, and probably traders exit below 16. You can see some of them did, and that's what's causing 17. Trying to get back to the entry price of the 10 high, which is where we did. Again, break-even stops really not a good idea, especially on trading range days, because it'll do stuff like this and then it'll reverse up. So that the 10 high is going to be a target since it was a swing point. which is what we ended up touching during 17. 18 is a high one, but I think we're going to get 2 legs sideways to down. 16 and 17 probably strong enough for a second leg. So probably not a good buy above 18. And you can see the traders who bought the 15 close disappointed 16, 17, scaled in lower, maybe down here. They're getting out around break even on their first entry with a profit on their second entry. 19 is a double top with 16. It's potential low too short, but it's not very good. It's a bull bar. And you get disappointing follow through a doji on 20. Big outside down on 21, but not closing very near its low. Not very good. Again, this just looks like a trading range. 22, a bear bar closing near its low. Yes, but I think you're selling a potential second or third leg down, and you're selling an inside bar, which is a low one short. And you're selling your really overall in the middle of the trading range. At this point in the day, you should be pretty comfortable with the fact that it's going to be a trading range day, and you should be waiting for a strong breakout for the most part. 23, follow through for the bears, but a tail on the top, not as good as it could be. And then an inside bar, 24. Disappointment on 25. It's 2 legs sideways to down. It's a high 2 above 24, but you're buying right at the moving average, and you get a disappointing bar on 25. But the bears who sold down here are going to be disappointed enough in this that we're probably going to find more buyers down here than sellers. Additionally, it's 1 push down, 2 pushes down, and a third down on 25. So you're trading a third leg in a trading range if you're selling 25. Not a very good idea. Outside up on 26, and it's an outside pattern, 25, 26. 25 isn't technically an outside bar, but if it looks like an outside bar, it'll probably, close is close enough, and it'll probably trade similar to that pattern. So buying above 26 is okay. But the follow through on 27 is relatively disappointing. You wanted a better bull bar, but you end up getting a doji. Generally when you get an outside pattern, there's a 60% chance of some sort of measured move. The bull bar closing, above its midpoint on 28, okay for the bulls, but again, just not ideal. And then another doji bar 29, and then a bull bar 30, but a tail. So it could be 1 pullback, 2 pullback, 3. And bears might see it as a wedge, and we might need 2 legs sideways to down. And if you look at 31, it went down and then up and then down again on 32. So that is 2 legs sideways to down on a smaller time frame for 31, 32. Bulls probably would have exited below 32, which is why traders bought the close of it, defending it, knowing that they're only risking a couple of ticks and hoping to make a big profit. And that's exactly what happened. 33 had a tail on the top, but still okay to be long. Follow through for the bulls on 34. You're probably getting a second leg up, but does this look like it's going to be some huge breakout that's going to get, just tons of follow through? Probably not. It might get to yesterday's and last week's high, but overall, this is probably not going, very far. Disappointment on 35, but then a bull bar 36 closing near its high. The problem with 36 is it's a wedge, 4, 15, or 16, and then 36. So you're buying right on a resistance line. And if you notice, we've had higher lows all day. This is a higher low, this is a higher low, this is a higher low, higher high, higher high, higher high. So the odds favor the bulls a little bit so far today. 37, a bear bar closing near its low. It's potentially a sell. You're probably getting 2 legs sideways to down. Some follow through on 38 for the bears, but I don't know. I probably wouldn't sell up here. I would wait for a pullback in a second entry. This is strong enough for its own second leg, so we might have to form a lower high, which we did. 39, a bear bar, but not all that good. Big tail on the top. Probably buyers not too far below. And then 40, an inside bar, but I'm not buying above it. Probably not selling below it either. Follow through for the bulls on 41, but again, we're high in a trading range at this point. I would just rather wait rather than buying. If you're going to buy, I would need more follow through for the bulls and a close above the 36 high. Why the 36 high? Because, like over here, the traders who bought this close were disappointed and sold out at break even. So I want there to be bulls buying this close. When we get back up here, I want to see a close up here so that it shows that the traders, they weren't selling out of here. They thought they still were convinced they were right and they were buying more. So a strong close above the 36 high would go a long way for the bulls. 42, it's a lower high, major trend reversal, wedge, pullback. So a reasonable short below 42. Doesn't trigger on 43, but you would get filled on 44. It's low probability, but it's okay. And by the time you get 45, it's a bear bar closing kind of near its low. I think it's a reasonable swing sell on 45. It could be a second leg trap, but it's okay to be short. 46, a tail on the bottom. Sometimes you're going to get a dump bar here. Sometimes you're going to go sideways. Bulls want the high 2 above 46. Bears don't want it to trigger, so they're selling the close, trying not to let it. And you can see it doesn't end up triggering. We do get the dump bar on 47. Can you sell 47 for always in? The problem is this is a trading range day, and right as the market becomes always in long, 36, or clearly always in long, we were probably always in long down here, but When it becomes clear, like 36, you get the reversal. When it becomes clear, 47, you get the reversal. So additionally, you're also buying or you're also selling right on a channel line, right where the bulls have been buying all day. So if you're selling 47, you're selling on a channel line, low in a trading range, right when it becomes clear. So maybe not as good. Um, and you could just wait for follow through. At 48's another bear bar. You're probably going a lot lower, so probably okay. But maybe I don't know. It's kind of a tough one. Probably not the best sell, but I don't think necessarily super unreasonable. Reversal up 48, but we're getting higher lows, but it's a small bar. I don't want to buy. Follow through on 49 for the bulls, but a big tail on the top, and then a low one short on 50. Looking for a second leg from this, but this is too steep for me to want to sell anything here. I'd rather wait. You know that if we get back here, they're going to be buyers. So it's not a good sell. You don't have good risk reward. Your probability is never that great in the middle of a trading range. Bull bar 51 looks like a second leg up. You're not going to sell 52 though, because these are two pretty strong legs, relatively steep. This is kind of a day for the most part, I think, without a lot of good swings. So especially if you're new, this is just if you avoid losing money on this day, that's a big win. It's pretty easy to get crushed on days like this, I think, especially early. 53 disappointment for the bears who sold below 52, and then 54 potentially a second leg down. We're just really in a tight trading range, and we end up getting the tight trading range. The breakout attempt on 57, but big tail, and we end up getting disappointment 58. So we're clearly in a tight trading range at this point. On 59, 60, it's a double bottom, 57, and bulls want a breakout above and a measured move up. I wouldn't buy personally above 60. I'm sure some traders smarter than me can. It's probably always in long, but it's not all that great. Then you get a bull bar 61, but a tail on the top. And essentially 62 ends up being exactly, it's always in long on 61, but you are at the top of the trading range, and some bulls will be selling out around break even here. And all those bulls who started to exit here, they ended up buying back their longs in a panic as 62 was happening, going for the measured move as well. 62, a huge bull bar, bigger than pretty much the rest of the day's range, or about the same size. So probably good enough for at least a second leg, but it's such a big bar that traders will probably be looking to take profits more up here than to buy. So we might get a deep pullback, which you do on 63. Doji on 64, inside bar high 1. Probably not the best buy since it's a doji bar. And then an inside bar 65. Outside down 66. Do you sell 66? No, but you can probably exit longs. If you do exit longs, I think you buy it back above 68 since it's always in long, and that's a bull bar. And if you exited, you need to get back in, looking for a second leg up from this. What ends up happening is you get a failed breakout above the high, and then 70 closes near its low. So it's three pushes right here, 62, 66, and 70. Bulls might exit below 70 or 71. And then traders start to exit, and big surprise on 72. And traders will sell 72 looking for follow through, which you get on 73. Huge disappointment, 74. We found buyers at the bottom of the buy climax, expecting a second leg up, but it was just for a scalp, and then we got a bear, basically a sell off into the close. For stop entries today, I thought 10 was okay. Probably have to get up below 16. Buy it back above 26. Probably get out below 37. Maybe 42, 45. Get out above 48. And then, it's theoretically a buy the close bar on 62. It's probably not the worst thing in the world to buy the close, but you have to have a wide stop and be willing to probably scale in. You have to be expecting a pullback, so don't buy up here, the close of 62, expecting the market to put another bar that looks exactly like 62. You probably got the spike, and you're looking to trade the channel if you're buying this close. So if you buy this close, you have to be expecting a pullback, and then you're hoping a channel is going to start that's going to rally into the end of the day. But because of the disappointing context of the daily chart, we didn't end up getting that rally, and we got the big sell-off. On the daily chart, it's a doji bar. I wouldn't sell it, but one of these times we are going to end up getting a strong move to the moving average, or we're going to get a close below the moving average. When we do get the close below the moving average, we're probably going to bounce back up to this high, since we've had so many straight bars above the moving average, and this has been a pretty tight channel. So for the bears, we're still on the channel line, and it's a low one short, but I wouldn't, or I guess you could argue it's a low 2 or low 3. It's kind of fuzzy, but tight channels like this keep making wedges that fail. So you keep having wedges and they keep failing. So it's not really a good short anywhere in here. I think that the traders who sell below this and scale in higher will probably make money. We'll probably get back to this high. I would pay a lot of attention to this high tomorrow. That's your first resistance point or support point is this high. Your second support point is probably that high. But overall, I thought this was a big enough feature that it would probably dominate for the rest of the day and for a couple days. But now this is big enough. This is much bigger. They undid what the Bulls did. So we might get some sort of second leg up overnight from this. But overall, I think this is clearly the dominant feature of the day. And we might end up getting some sort of, big second leg down tomorrow. So today, kind of a difficult day. Better to be patient on days like today. And yeah, that's the day.